So in this video, I want to talk about the most important factors to look for if you are trading growth stocks, whether it is swing trading or positional trading, does not matter. These are some of the factors which are extremely important that you should be focusing on. So let's get into it. So this is Dixon Technology. I'm just taking a random example. I click here. So this detailed information window opens up. I will expand this. Okay. I want you to focus on these 5 factors because this is key. Now, these are proprietary ratings by MarketSmith. However, if you understand the concept behind this, you really don't need MarketSmith to come up with these ratings. You can come up with these ratings on your own. But let me explain what they mean by this. Let us begin with price strength. Price strength 84. What does this mean? This is a ranking 84. What this means is that the price, the 52-week performance of Dixon Technologies has been better than 84% of all the stocks in the Indian stock market on a 52-week performance basis. This is important. So what they are doing is basically they are taking the company, its 52-week performance, and comparing that performance with the performance of all the other stocks in the Indian stock market. So 84 means Dixon has done better than 84% of all the stocks in the Indian stock market on a 52-week performance basis. Similarly, EPS rating 95 means based on earnings stability, consistency, growth, recent as well as long-term. Recent as well as long-term earnings stability, consistency, and growth. If we look at these factors and compare these factors of one company with the same factors for all the other companies in the stock market, we get a ranking. Okay. So which means Dixon Technologies, in terms of earnings stability, consistency, growth over the short term and long term, Dixon Technologies has done better than 95% of all the stocks in the Indian stock market. That is what this number means. So I want this number to be 80 or more. Similarly, I want price strength to be 80 or more. Next is accumulation distribution rating. This is called institutional demand. So MarketSmith has their own proprietary formula to come up with institutional demand. For that, they look at price and volume. So they divide the entire stock market into 5 categories: A, B, C, D, and E. A means very high institutional demand. B means very good institutional demand. C means decent institutional demand. D means institutions are selling the stock. E means institutions are probably dumping the stock. So I look for categories A and B only. A means very high institutional demand. B means good institutional demand. So I want this number to be A or B. Now this could be A plus, A minus, B plus, B minus. They have their categorizations, but as long as it is A or B, I am fine. So let me repeat. EPS rating should be more than 80. Price strength should be more than 80. Buyer demand, the institutional demand, should either be A or B. Next is group rank. So MarketSmith divides the entire stock market into 197 industry groups. So if we look at the top 20 percentile of industry groups in terms of their 6-month performance. So if we look at the 6-month performance of industries and we try to find the top 20 percentile, the best performing industries, those are the industry groups where we should focus on. So basically, what MarketSmith says is out of 197, focus your research on top 40 industries. So they will give a rank. So top 40 industries, these have done better than the bottom 150 industries, 150 or so. Okay, that's the idea. So this number should be 40 or less than 40. That's the rank. Master score. Again, master score is divided into 5 categories: A, B, C, D, and E. A means more than 80 rating, B means more than 60 rating. So I want this to be A or B. So this number should be 60 or more than 60. Okay. So let me repeat. Master score should be 60 or more than 60. By the way, what is master score? Well, master score takes into account all the fundamental and technical factors of a company, compares that company's fundamental and technical factors with the fundamental and technical factors of all the other companies in the Indian stock market, and comes up with a composite rating, a total rating based on technical and fundamental factors, which will include earnings movement, which will include price movement, which will include industry strength, earnings stability, the track record, basically technical and fundamental, short term, long term. That is how they come up with a market score. And when you are comparing one stock with another stock, we have to compare them based on the same parameters. We can't do comparison based on different parameters. So master score should be 60 or more. EPS rating should be 80 or more. Price strength should be 80 or more. Accumulation distribution rating should be A or B. Group rank should be between 1 and 40. So that's a filter there for you. Okay, just if you simply put this filter, this filter will automatically keep you away from the market traps or those companies which are not worth your time. Only those companies which meet this criteria are most likely to be growth stocks, are most likely to deliver uh, fantastic returns, because what MarketSmith and William O'Neill company has done is they have looked at 125 years of stock market history. And based on this history, they have looked at all the growth stocks which went up like 100% in 1 year, triple digit returns in 1 year. Okay, stocks which doubled, tripled, stocks which went up 100 times, 1,000 times. So MarketSmith looked at all those stocks before they began their move. This is important. What were the characteristics displayed by those stocks before they began their move? And they found out that these are the factors: the earnings, the price strength, the industry group strength, institutional demand, and overall technical and fundamental factors. When these factors come together and the stock forms a base, that stock is very likely to give fabulous returns in the future. That's a proper growth stock. If you are a positional trader, you should look at all of these parameters. And this is pretty broad parameter, because if you look at EPS rating, if you make this 80 or 81, you are still talking about the top 20 percentile, which is top 1,000 companies out of total 5,000 companies in the Indian stock market. So this is a pretty broad parameter. So this is what I called the best stock if it meets all the criteria. Now within this universe of best stocks, I have created another category which I call best out of the best. So for example, if the master score is more than 60, that is fine. But if it is more than 80, that is super fine. EPS rating, if it is more than 80, that is fine. But if it is more than 90, it is super fine. Similarly, price strength, if it is more than 80, it is fine. But if it is more than 90, it is super fine. Similarly, accumulation distribution rating, as long as it is A or B, it is fine. But if it is A, it is super fine. Similarly, group rank, if it is between 1 and 40, it is fine for me. But if it is between top 20, okay, it is super fine. So one category is the best stocks, and within this category is the best out of the best stocks. So the more closer you are to the best of the best stocks, the higher is the probability that the stock can deliver good returns, as long as you buy the stock at a proper basing point. Basing points are given by MarketSmith with these dotted lines, green lines. Okay. So see, after this breakout, the stock consolidated for a while, probably did not come down 8% after breaking out of here, and just skyrocketed from there. It went from around 7,000 to 12,000. That's a fabulous return. That's a 50-60% return from this breakout day from February till about September. That's a fabulous return. So these breakouts are already identified by MarketSmith. If you have MarketSmith, you have a good advantage. But if you don't have MarketSmith, you can still come up with these numbers. All you have to do is just download the stock market data, compare one stock with other stock based on the 52-week performance, download the industry group data, compare one industry with all the other industries based on their 6-month performance. You will get the best stocks from the best industry group. And those stocks which are showing volume on the weekly chart, those are the ones that have this institutional demand. And for EPS rating, just go and look at the quarterly growth, these numbers, the quarterly growth in earnings, sales. Okay. If I click consolidated, now you will see why the EPS rating is 95. See, look at the fabulous quarterly growth in earnings and sales. Okay. Master score, you can't do anything because this is a proprietary ranking system. They have not disclosed the formula that they use. They just give a general description of what they include in that score. For us, what is important is how to apply these parameters. Okay. It doesn't matter how they calculate. They have their own 125 years of stock market study, and they have done all the calculations for us. We just need to know how to apply this. And just because all of the criteria is met doesn't mean that you go and buy the stock. You have to wait for a proper basing period. When the stock is forming a base, and as it is coming out of the base on high volume, that is the proper time to get involved with the stock. And apart from this, there are some other factors like return on equity. Then these factors, I have made separate videos on this area. Okay. Watch all those videos. Once you get an understanding of what is given here, okay, plus you understand how to read the chart, that is all the knowledge that you need to select growth stocks either for swing trading or positional trading. Okay. And when do you swing trade a stock and when do you do positional trading in a stock? That is also I have explained in one of the previous videos. Just spend time on my YouTube channel. You will understand everything. So I hope this video was helpful to you. Please support this YouTube channel. Please press the like button, comment on the video, ask any questions if you have, and please share this video so that this reaches other people who want to become professional stock traders just like you. Okay. Thank you so much.